Hello traders, Gary Wagner here, just before noon in Honolulu, 5 o'clock in New York. It is Wednesday, November 27th, 2019, and this is the Daily Report for Gold and Silver. On the day before Thanksgiving, we do have the precious metals markets trading lower. Multiple events are really factoring into those lower pricing. First of all, we've got U.S. equities once again continuing to move to all-time record highs. Today, the Dow, the Standard & Poor's, as well as the NASDAQ all closed in newfound territory. Secondly, there has been news coming out of the White House as well as China that they are getting close to this interim Phase 1 trade agreement, something that is signable. And so those factors coupled with the Fed and a monetary policy that will continue to be accommodative have genuinely put pressure on the precious metals markets. Lastly has been dollar strength. So collectively, we have seen these multiple events absolutely putting gold under pressure. Now, we are at a critical level, and when we pull up our technical studies, we'll discuss that level and where it would go if it would break through and where we currently find support and resistance. But first, let's take a look at current pricing. Without question, gold continues to trade under pressure, today giving up almost 0.5%, closing down $6.80 at $1453.50. What is also noteworthy when we look at our current chart is the 150-day moving average, and as you can see, they have been moving closer and closer together, and if the trend of lower pricing continues, we most certainly could see a death cross form within these two moving averages. Silver also traded lower on the day, losing almost a full percentage point, 0.9% at $16.89. Palladium bucked the trend once again, gaining almost 2% or $34 at $1,816.90. And lastly, platinum lost about 1.6%, about $15 below 900 again at $896.80. Now, there were a couple of factors that really contributed to today's decline. One of them is an extremely strong U.S. equities markets with the Dow, the S&P, and the NASDAQ all closing at new all-time record highs. You can see that, of course, in this weekly chart. And we had dollar strength coming back. The dollar has been strong, but now it gained about 17 points at 98.34. On today's show, what I really want to look at are critical levels of support and resistance and what we can expect to see as we go through the Thanksgiving holiday into next month. We are looking at a weekly chart, this in Henkin Ashi or Japanese average format. And what we can see is that we have had 4 consecutive weeks of red candles, and that means that the market has closed below its opening price. And realize the major difference between this type of candlestick chart and a standard candlestick chart is how they place the open. The open is always the midpoint of the prior candle. Therefore, they're getting an average. And it gives us an idea of trend and strength of trend. What we can say is that over the last 3 weeks, we've had an absence of any kind of a upper wick. And what that says is that no time during the week did the market trade at or above the midpoint of the prior candle. We also have a series of lower lows, not consecutive lower lows. We have this extreme low 3 weeks ago, but for the last 2 weeks we've had lower lows, and now the current low is very, very close to the low that occurred 3 weeks ago, and that tells me that we could see support come in this area. However, we still have a defined downtrend, and there is still definitely some steam left into that downtrend. And we know that the basic market scenario has been so highly integrated into other outside events that have been influencing gold pricing, such as U.S. equities that are on an absolute tear, closing at new record highs, very, very solid economic data coming from the United States, a monetary policy from the Fed that continues to be accommodative, and the fact that there is talk about the fact that they are closer to some sort of a resolution or Phase 1 agreement in regards to the current trade war between the United States and China. But we're also seeing with such solid economic data that the trade war is certainly not affecting the U.S. economy in the same way that it is affecting the Chinese economy, which brings us to our assessment as to where the market could head over the next couple of weeks. Of course, tomorrow is Thanksgiving. Markets will be closed. They're only open for a shortened time on Friday with light volume. We have seen the market really get trashed due to that fact, as some traders took advantage of that point. What we do know is as follows. There is some support that is coming in at around 1450, and as long as the market holds this particular area, we could see a solid bounce off of that to higher pricing. As of right now, though, we saw the market actually hit this bottom, begin to track higher, but it found strong resistance right up here at the 28.6% retracement, and that caused the market to break back down, and that's where we're getting this double bottom, these lows here as well as here. If, in fact, this particular price point holds and there is some scuttlebutt or a breakdown in the negotiations, or we see the U.S. equities markets top off and begin to trade lower, we would see a nice solid bounce to the upside. If that happened, I would look for the following areas, and the most important area would be 1481. That is this, the 28.6% retracement. Above that is going to be 1500 and then 1525. Those would be absolute major levels of resistance right now. If the market cannot hold this area, we continue to get solid performance in U.S. equities, the economy stays on track, and there is some headway made in terms of the negotiations, and we see pricing break below 1450. The next level we would have to look at would be the 50% retracement, and that comes in at $1,418 per ounce. Traders, I want to wish all of you a happy Thanksgiving. Whether or not you follow the holiday or not, we all have many, many reasons to be thankful for. And tomorrow, with the markets closed, let's spend a couple of moments at least to appreciate what we are thankful for. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you for the next daily update and review on a shortened version on Friday, or if it's extremely quiet with no activity, we'll pick back up on Monday morning. Have a great holiday. Bye-bye.